everybody. Welcome to the morning market briefing, Friday, February 25th, 2022. Hope you're doing well. Wild times in the market, in the world, all that good stuff. If you have not listened to our thoughts on the onset of Russia's invasion into Ukraine, they are up on the blog now from yesterday's morning call. There's a little blog post there, so you can check that out. Tom, let's jump in. Let's start with some of the news, and we'll talk about a little bit of the market reaction. We did hear from Biden yesterday. He was supposed to come out at 12:30. They pushed it back to 1:30 in true presidential fashion. It was closer to 1:45 when he came out. Major takeaways, I felt like, were primarily that we're going to go with similar tone to what was said before the invasion, which is really relying heavily upon sanctions. And I don't know that we necessarily learned a lot. I don't know if you watched it. I know you were having to work from home a little bit. I felt like the comments themselves, the prepared remarks, were consistent with what we had been told and what we had heard. I thought it really devolved when we got to the Q&A. Tom, I'll throw it to you for thoughts.
Yeah, the main takeaways, and the one you'll probably see a bunch of on the news, is that there was no talk of removing Russia from the SWIFT system, which is the global payment system that pretty much every bank uses. And the main theory there is that Germany and Italy are not willing to take that step just yet. They're a little bit more tied in economically in terms of their reliance on Russia for natural gas, for basically keeping their homes warm for this winter. And that would be a step too far at this moment. Though I think that should things continue to escalate, that's probably the biggest and baddest sanction that has not been dropped yet. Other notable takeaways was there was not a lot of clarity on where China and India are in this scenario. They was asked directly by the Indian foreign press whether or not there had been discussions with India and whether India was going to take similar sanctions. And they said they were in talks, but there was no clarity there. And then when asked if they were talking with China about putting the pressure on Russia, Biden said that he was not prepared to answer that question just yet. So I think those are going to be two big pieces there, primarily because, just in terms of the vast number of people, if this really escalates, we're going to want to have India on our side, if not China, because, just from a number standpoint, we would be in big trouble. But that is something that I think is interesting to keep an eye on. There were reports last night that the Chinese embassy was evacuating from Ukraine last night, and there was no real information as to whether or not that was based on the fact that they had potentially crossed Russia, or the fact that they just wanted to get their people out of there so they didn't get blown up. Next piece would be there was discussion about whether or not Putin specifically would be sanctioned. There are ways to freeze his assets, like a lot of the oligarchs. He's got assets in the UK and in Germany and other places in Europe where he, hoards money. And that was on the table. Specifically, Biden said that they would potentially look at that as the next escalation as well, trying to cut off his money supply personally, though that hasn't been done yet. And there's a lot of pushback as to why they just didn't go ahead and do it today. And he didn't really have a good explanation for that, though there are reports this morning that I saw on Twitter saying that that move is coming imminently, that they're probably going to sanction and freeze the assets of Putin personally this morning. And then the big takeaway for me that got me riled up was that there was an explanation of what had happened with Russian bonds that was completely incorrect. Biden specifically said that Russian borrowing costs had gone up 15% overnight. Actually, what happened is the borrowing costs had gone up closer to 40% overnight to 15%, which just lends, my theory that absolutely no one understands bonds, which is great for me, job security wise, but someone wrote that into his speech and had no idea what they were talking about. So this is where we are in terms of the government and their understanding of sovereign debt. But those were my main takeaways. I'm not sure if you had any, Andrew.
Yeah, the bond comment is classic. I don't think you will ever see Joseph Robinette Biden as a bond analyst here at Norwell Capital. I don't know. It might be kind of fun. I feel like Tom would have a good time training that guy up. I think it was interesting. I don't really know. It seemed like I think people can probably discern which way I lean politically. It seemed like people that lean the way I want were very dissatisfied with what Biden said. I just continue to struggle with, I don't really know what we want him to do here. I was encouraged that it did seem to de-escalate some of the panic. I mean, we were watching it in the kitchen here at the office, making trades, and the market absolutely moved when he came out. I think there was still uncertainty in terms of what is the scale of this. And to his credit, he didn't come out and increase the panic levels among people. Now, I think the criticism largely hangs on, there's certainly an inconsistency between what Vice President Kamala Harris had said. I think maybe it was on Sunday or Monday, that said, no, these sanctions are being used as a deterrent with hopes that we can get a diplomatic resolution to this. Biden made it very clear, like, the sanctions were never going to deter this. They were going to be more of a response. I mean, there were certainly some inconsistencies there in terms of, maybe some of the messaging, but I was encouraged that the overall tone was de-escalated. There is a lot that's unknown. I think the China piece is probably the single thing that's giving people the most heartburn right now. Are they going to be emboldened to make a move on Taiwan? I truly think the American response would be wildly different to that, because there's just much more at stake. I think it might seem easy to say, well, China says Taiwan has always been part of China. Russia says Ukraine used to be part of Russia. They want it back. I think it's easy to say these are two cases of apples and apples, but it's really apples to oranges, in my opinion, given what the U.S. would have at stake. I mean, we said this in the blog post yesterday. I mean, ultimately, we might see some increased inflation as it relates to fuel costs. Even oil came down quite a bit yesterday. It was as high as $105 a barrel. It closed up like 1% for the day, which is a pretty normal move for oil. But I think, if it were to happen with China and Taiwan, that would be treated quite differently in terms of the U.S. mood and desire to really stop the conflict. I mean, I think the reality is nobody in the world really approves of what Putin did, but I do think there's a lot of people that are relatively unimpacted by it as it relates to investments. We did see the market rebound. The NASDAQ actually had its biggest swing from spread between its high and its low that we've seen since March 20th of 2020. At one point, it was down more than 3%. It closed up 3.4%. Certainly don't want to make the assumption that Biden drove that. The NASDAQ was actually floating positive, kind of in a roughly neutral territory before he even spoke. I mean, things really rebounded. In early day trading, I was talking with a couple of clients in the morning. I was relatively encouraged that we only opened down, on the S&P, maybe 1 3/4%. We were back to 1.5 and 1 1/4. I mean, I was sending an email to a client. I had to keep changing the number for the S&P because it kept coming up even in the first 30 minutes of market activity. I think that was a pretty good barometer on how much this had already been priced into the market. Tom, I don't know if you have any thoughts in terms of just market reaction.
Yeah, I think, and we've talked about this concept a lot, especially with tapering and raising rates, is a lot of times talking about something happening in the market before it happens causes a lot more pain than when it actually happens. And I think we saw a little bit of that yesterday. We've been talking about this and talking about this potential war, something's going to happen. And then once it actually happens, then you can kind of react. You can say, hey, there's a lot of like, what's going to happen in the market if there's a war? But once there is, you can look around and say, all right, well, this is how the market's moved. This is who we think are going to be the winners and losers. And then people react, and then the market reacts accordingly. And I think that sentiment was already exceptionally low. I think that the threat of rates coming up has pushed sentiment down as well. And so people are kind of feeling already pretty pessimistic about the markets. And then the news hit that the Ukrainian invasion had happened. And then everyone kind of looked around and said, all right, well, now what do we do? We got to start making actions. And I think a lot of people who were short started to short cover. They made their money. The market dropped significantly, and they were going to go ahead and take their gains. I think that a lot of people were looking around and saying, hey, companies and Target and all these other companies aren't really going to be hurt that much. Things like L3Harris, which is a defense company that we own, is going to do well. And they started making trades based on that. And I think that's what really changed the market, is people reacting to the fact that it's already happened. Now what do we do? As opposed to it could happen, it could happen, it could happen. And the anxiety related to that.
Yeah, we talk about this all the time. The number one thing the market hates is uncertainty. Even a negative certainty is often more comforting to the market than the unknown. So even having, specifically as it relates to Russia and Ukraine, the bad case scenario was Russia invades. When that happens, the market knows how to process that information. They know how to act. And I think we saw a relatively steady and resilient rebound there that I think gives us some cause for optimism. Even as we look, today at futures, NASDAQ futures are up about 0.5%, S&P futures up 40 basis points, Dow futures up 31. We have had some economic data come out over the last couple of days that has been kind of lost in the shuffle. We'll get to that in a moment. But overall, I think we're in relatively good shape. Tom, anything else on the Russia stuff as we look to switch gears here a little bit?
Yeah, I think the one thing to note is how bizarre it is to watch a war on Twitter. Just getting information, there was a bunch of tweets going around about a fighter pilot that had 6 confirmed air kills yesterday. They were calling the ghost of Kiev. There's, all this stuff going around about the Klitschko brothers are about to jump in and start fighting. I think it's Vitaly is the mayor of Kiev, and I was doing a little Googling just because just to see what the origins were, because they were Soviet, but I guess technically he was born in Kazakhstan, so he goes in stark contrast to the Borat stereotype of what a Kazakh looks like. Though I guess they grew up outside of Chernobyl, which is in Ukraine. Their dad was a Soviet army officer who was in charge of cleaning up the nuclear reactor issue in Chernobyl, and it ultimately led to his demise from cancer from radiation exposure. So I would imagine there's a little bit of a chip on the shoulder of the Klitschko brothers for that, and having grown up in Ukraine, I guess that's where they have their alliances as a result of where they grew up rather than where they're actually born. But pretty interesting stuff. But that was really my main takeaway, is watching a war on Twitter is really bizarre. I feel like we really haven't had that, at least on the global scale. It's just weird. Something to talk about, I suppose.
Yeah. Last thing I have on Russia, BlackRock, they're the largest asset manager in the world. And as you might imagine, they do hold a decent amount of Russian dollar denominated debt. Could become a story for BlackRock. I think in my mind, it's such a relatively small portion of their overall book that if anything, it may just create a little bit of an opportunity. Certainly that headline is not going to look overwhelmingly favorable. It had a decent day yesterday, was down just a little bit, but given the headline risk that they're kind of weathering, didn't seem to get beat up too badly, basically flat pre-markets today. So something to keep an eye on. Yesterday, we did get initial jobless claims, came in essentially right on top of the expectation, kind of in the mid 230,000. Not a whole lot to see there. It got totally swept under the rug by everything that was going on with this global conflict. But today, switching gears back to COVID a little bit, we're supposed to get new guidance from the CDC, specifically as it relates to mask requirements at the community level. Tom, what are you expecting?
I think this might actually be the death knell of COVID, at least in the US. I think we're moving towards the UK model of dropping, all of the different quarantine requirements and masking requirements. I think that just given everything that's going on in the world, that this is probably going to be the way we're moving. We've always kind of been a couple weeks behind the UK in terms of what they were doing. And my expectation is that they're basically going to drop all mask requirements and then say, hey, if we reach a certain level, it would be recommended that governments issue mask mandates to limit spread when spread begins to tick up. But I think ultimately this is the end. I saw some wild tweets yesterday about the worries in Ukraine about the low levels of vaccination in Ukraine, which I think is the most absurd thing I think I've ever seen, was that like 52% of people are unvaccinated in Ukraine, and people were worried about that because they would be huddling, in tunnels and underneath buildings together, which is, I think we moved past it. I think this is a bigger story, and I think that probably is going to put the nail in the coffin of COVID.
Yeah, that's interesting, and you kind of contrast that hot take with, I don't know, there's just something about seeing the president in the Situation Room with all the top advisors, military commanders, et cetera, trying to stop a very bloody global conflict, and they're all wearing masks. I don't know. It's a weird a weird paradox in some regards of, what are we actually worried about at this point? I think I'm with you where I think this is going to potentially and hopefully, knock on wood, once and for all, kind of remove COVID from the forefront of policy, from the forefront of political debate. And hopefully we continue to see, just a slow transition away from this dominating everybody's psyche. So we'll see what happens. We're going to wrap it up there. Hope everybody has a awesome weekend. If you have any questions on your portfolio or anything you want us to chat about on the show next week, be sure to give us a text, give us a call, shoot us an email, whatever it may be. We'll talk to you guys soon.